Listen up. This isn't your typical stacking pep talk. This is a serious warning from a bullion dealer one who's tracked every twist and turn of the gold and silver markets. And what I'm seeing right now is something you cannot afford to ignore. You've probably been hearing a lot of noise out there. Bull markets, soft landings, inflation cooling, and the Fed having it all under control. But let me hit you with a reality check, because what I'm about to share isn't theory. It's a serious warning straight from the front lines of bullion dealing. And if you're a gold or silver stacker, you need to hear this, not next week, not next month. Demand for physical gold and silver has been relentless. Dealers are reporting shortages on certain coins and bars, premiums rising, and delivery delays creeping back in. That's not just a supply chain hiccup. That's a signal, an early tremor that something beneath the surface of the financial system isn't as stable as they'd like you to believe. When the public starts flooding into physical metals, it's never random. It's fear. It's mistrust of the fiat system. And right now, that fear is growing. The narrative on mainstream financial television is that inflation's under control, that the Fed can engineer a soft landing, that markets will keep chugging higher. But ask yourself, if that story were true, why are bullion dealers seeing unprecedented demand? Why are central banks across the globe quietly hoarding gold at levels we haven't seen in decades? They know the game. They understand that fiat currency, whether dollars, euros, or yen, doesn't hold value forever. They see the writing on the wall: unsustainable debt, political dysfunction, and central banks painted into a corner. Let me put it in plain English. The fiat system is a house of cards. And while everyone is partying inside, stacking metal is the equivalent of quietly slipping out the back door with a fireproof bag. When this thing collapses, it won't matter how high the stock market was. It won't matter what your 401k statement said last quarter. What will matter is whether you hold something real, something tangible, something outside the system. But here's the warning most stackers don't want to hear. Just because you own gold or silver doesn't mean you're automatically safe. There's a right way and a wrong way to approach this. Too many people treat stacking like a lottery ticket. They buy a few coins, pat themselves on the back, and think they're insulated from whatever storm is coming. You need a plan. First, understand that premiums matter. When demand surges, the difference between spot price and what you pay for physical skyrockets. If you're not careful, you could end up overpaying by 20, even 30%. That's money you're not getting back. So the question isn't just, should I buy gold or silver? It's, am I buying smart? Am I paying attention to liquidity, premiums, and the actual cost of ownership? Second, don't get tunnel vision. Silver is attractive. It's affordable. It has industrial demand. And historically, it outperforms gold in bull runs. But silver is bulky. If you're stacking thousands of ounces, storage becomes a real issue. Gold, on the other hand, is compact. You can hold significant wealth in a small amount of space. The right move isn't to bet everything on one or the other, but to strike a balance that matches your personal situation. Diversify within the metals themselves. Third, timing. I'm not saying you should try to trade gold and silver like a stock. That's a losing game. But you need to be aware of cycles. They surge, they pull back, they consolidate. If you pile in when everyone else is panicking, you're the one paying the highest premiums and taking on the worst risk-reward setup. Smart stackers build their position methodically, consistently, when fear is lower and premiums are reasonable. That's how you prepare without getting caught in the mania. Now let's zoom out to the macro picture, because this is where the real urgency comes in. Debt levels are exploding. The US government runs trillion-dollar deficits as if it's nothing. The interest expense alone is climbing toward unsustainable levels. And the only way out of this box is more money printed. Maybe not today, maybe not tomorrow, but soon enough, when the next recession hits, and it will, the Fed will pivot back to zero rates and key. They'll have no choice. And every time they do that, it's a silent confession that the system can't survive without artificial support. That's why central banks themselves are buying gold. They see the end game. They know the dollar's reserve status isn't eternal. They're positioning for a world where trust in fiat erodes, where confidence evaporates, and where real money, gold and silver, reasserts themselves as the foundation of trust. But here's the paradox. When that panic moment comes, when the average person realizes they need metals, it will already be too late. Supply will vanish, premiums will explode, and you won't be able to get your hands on the metal no matter how much cash you wave around. That's the brutal truth dealers understand. When things break, the window slams shut fast, and the only people positioned are the ones who acted before the crowd. So the warning is clear. Don't wait for the headlines. Don't wait for your neighbor to start talking about silver at a barbecue. Don't wait until the mainstream admits inflation isn't a transitory after all. By then, it's too late. The time to act is when things still feel calm, when most people are distracted, when you can still acquire metal without mortgaging your future. And let me make something else very clear. Stacking is not speculation. It's not about chasing quick profits. It's about insurance. Nobody buys car insurance hoping their car gets totaled. You buy it for peace of mind. Precious metals are no different. If the system holds together, fine. You've preserved purchasing power over the long term. If the system cracks, your metals could mean the difference between being trapped in chaos and having real options. So here's the takeaway. Reevaluate your stack. Don't assume you're prepared just because you own a few ounces. Look at your balance between gold and silver. Look at how much cash you've allocated versus what you've put into physical. Ask yourself, if tomorrow the financial system locked up, if banks shut their doors, if the Fed had to intervene again, would you feel comfortable with what you hold in your hand? If the answer is no, then it's time to get serious. This isn't fear-mongering. This is reality. The signs are flashing, the dealers are sounding the alarm, and the macro backdrop is screaming that the storm isn't over. It's just starting to build. Most people will ignore it until it's too late, but you don't have to. Act decisively. Stack smart. Protect your purchasing power before the rush begins. Because the moment of truth isn't in some distant future, it's approaching fast. And when it arrives, the only thing that matters is whether you listen to the warning and prepare it accordingly. Stay sharp, stay disciplined. And above all, stay free. What I'm going to share with you today is not the kind of message most people want to hear. It's not feel good, it's not hype, and it's not about riding some trend that Wall Street is selling you. This is a serious warning, and it comes directly from the real-world perspective of bullion dealers who are watching the precious metals markets day after day. If you're stacking gold and silver, you need to pay attention, because the way you act now could be the difference between protecting your future and getting caught completely unprepared when things start to unravel. Let's start with what's happening on the ground. Dealers across the country are reporting shortages in certain coins, premiums moving higher, and in some cases, wait times for delivery. Now, on the surface, that might not sound unusual. We've seen waves of buying before. But what makes this moment different is the backdrop. We're looking at a financial system straining under more debt than ever before, a central bank boxed in by its own policies, and a global economy that's shifting in ways we haven't seen in generations. Against that backdrop, rising physical demand isn't just a footnote. It's a red flag. It's a red flag. Think about it. If everything were truly as stable as the talking heads on television want you to believe, why would central banks themselves be stockpiling gold at record levels? Why would everyday people who for decades didn't even think about precious metals suddenly be turning up at dealer counters asking for physical? It's a loss of trust. When confidence in the system starts to erode, people instinctively reach for what's real. People instinctively reach for what's real. And there's nothing more real in the world of money than gold and silver. But here's the harsh truth that many stackers don't like to face. Owning metals isn't an automatic shield from whatever storm is coming. You can't just buy a couple of coins, toss them in a drawer, and assume you've done enough. There's a right way to approach this, and there's a wrong way. If you're sloppy about premiums, if you ignore liquidity, if you don't think strategically about how much of your wealth should actually be in bullion, you could find yourself in a worse position than you realize. For example, premiums right now are creeping higher. That's not just some arbitrary number. It reflects real pressure in the supply chain. If you're paying 20 or 30% over spot, you need to think carefully about what that means for your break. Even point. Dealers will tell you that when panic sets in, premiums can go through the roof. And at that point, the metal becomes almost impossible to get. That's why preparation is about building your position steadily before the panic, when premiums are still reasonable. Then there's the question of balance. Silver is attractive, sure. It's cheaper per ounce, it has massive industrial demand, and historically it's more volatile to the upside than gold. But silver is bulky. Try storing 1,000 ounces of it in your house, and suddenly you've got a real problem. Gold, on the other hand, condenses wealth into a small, easily portable form. The smart move isn't to bet your entire stack on one or the other, but to diversify within the metals. Hold enough silver to capture the upside, but anchor yourself with gold so your wealth is dense and manageable. And timing matters, not because you should try to trade these markets like a stock, but because human psychology drives waves of fear and greed. Metals don't move in straight lines. They surge, they crash, they consolidate. If you only buy in when the headlines are screaming and your neighbor is bragging about silver, you're the one paying the highest premiums. That's why the disciplined stackers, the ones who treat this as a long-term strategy rather than a get-rich-quick play, are the ones who come out ahead. Now let's zoom out and look at the big picture, because this is where the warning becomes urgent. The US. Government is running deficits so large they make previous crises look like rounding errors. Trillions in new debt every single year. And the interest expense on that debt is climbing so fast, it's on track to rival the entire defense budget. That's before you even consider entitlement programs, unfunded liabilities, or the next recession. So how does the system survive under that kind of pressure? There are only two options. One, the government could slash spending and raise taxes to balance the books, which politically is almost impossible. Or two, the central bank steps in to paper it over by printing more money, manipulating interest rates, and monetizing debt. And if history teaches us anything, it's that option two is the path they always take, which means more currency creation, more inflation, and more destruction of purchasing power. That's why metals matter. They're not tied to a government's ability to tax or borrow. They're not dependent on a central bank's promise. They are what they are, money outside the system. And in a world where every government is playing the same debt and debasement game, owning something real becomes not just prudent, but essential. Prudent, but essential. But don't think for a second that when the panic comes, you'll have time to calmly walk into a shop and buy what you need. Dealers will tell you flat out, when things break, the shelves go empty almost overnight. Premiums explode, supply vanishes. And if you didn't prepare beforehand, you're out of luck. That's the part people never seem to understand until it's too late. The time to build your stack is before the crisis, not during it. And let's be clear about something else. Precious metals are not about speculation. They're not about trying to double your money next quarter. They're about insurance. You don't buy fire insurance because you think your house will burn down tomorrow. You buy it because if it ever does, the consequences are catastrophic. Gold and silver are financial insurance against a monetary system that's already showing cracks. If the system limps along, fine, you've preserved value. If it breaks, you've got something to fall back on when most people are left holding worthless paper. So the message today is simple, but critical. Take this warning seriously. Evaluate your stack with clear eyes. Are you overexposed to one metal? Are you paying too much in premiums without realizing it? Do you have enough physical in hand to weather a serious disruption? And most importantly, do you have a strategy? Or are you just buying here and there without a plan? Because make no mistake, the storm is coming. You can already see the clouds forming, debt exploding, central banks trapped, currencies weakening, and confidence eroding. The people who dismiss it as fear-mongering will be the same ones panicking at the dealer counter when it's too late. But you don't have to be in that crowd. You have the warning. You have the knowledge. The only question left is whether you act. Prepare while you still can. Build your position strategically. Don't wait for permission from the mainstream media, because by the time they admit what's happening, the opportunity will be gone. Protect yourself, protect your family, and above all, protect your freedom. The clock is ticking, and the time to take this seriously is now. There are times when the writing on the wall is so clear that you'd have to be blind not to see it. But the problem is, most people don't want to see it. They'd rather cling to comforting illusions, believe what the politicians tell them, and hope that somehow the system they've depended on all their lives will magically hold together forever. That's not how reality works. And that's why I need to give you this warning, straight from what bullion dealers are seeing every single day. If you were stacking gold and silver, this is what you need to hear right now. When you talk to people who are actually on the ground, moving physical ounces of gold and silver, you start to notice a pattern. There's always a trickle of demand from longtime stackers, the ones who've been doing this for decades. Ian. But when waves of new buyers suddenly show up, people who've never bought a coin in their lives, that's when you know confidence in the system is breaking down. And that's exactly what's happening today. Premiums are rising. Certain products are backordered. Delivery times are stretching. That's not coincidence. That's a reflection of fear building beneath the surface. People might not be able to articulate why they feel uneasy, but their actions tell the story. They see inflation eating into their paychecks. They see governments piling up mountains of debt. They see political dysfunction everywhere they look. And something inside them whispers, this isn't sustainable. Drives them to bullion dealers looking for something real, something solid, something that doesn't depend on promises. Now, here's the dangerous part. When average people start moving into gold and silver, they're already late. The insiders, central banks, sovereign wealth funds, institutions, they've been buying for years. Just look at the numbers. Central banks have been accumulating gold at the fastest pace since the 1970s. Why? Because they understand how this game ends. They know fiat currencies have a shelf life. They've studied history. They've seen how every empire that tried to print its way out of problems eventually collapsed under the weight of its own lies. Take the Roman Empire. They didn't call it money printing back then. They called it coin clipping and debasement. They shaved silver off coins, replaced precious metals with base metals, and pretended nothing had changed. But people noticed. Confidence eroded. And once confidence was gone, the empire crumbled. Fast forward to Weimar Germany in the 1920s. The government printed money to cover deficits. At first, it seemed harmless. Then inflation took off. People rushed to convert paper into anything tangible: food, land, and yes, gold. By the time the average worker realized what was happening, the currency was already worthless. We like to believe it can't happen here. But history screams otherwise. Every fiat currency ever created has gone to zero. Not most of them. All of them. The dollar, the euro, the yen, they're just the latest experiments. And when they fail, it won't be the first time in history. It'll just be the biggest. That's why bullion dealers are warning. They see the pattern repeating. The same surge in demand, the same rising premiums, the same scramble for physical. They've seen this movie before, and they know how it ends. But here's the critical point. Most stackers don't understand what owning metals really means. They think it's about chasing profits. They think it's a trade, like buying a stock. That's the wrong mindset. Gold and silver aren't investments in the traditional sense. They're money, and they're insurance. They're the foundation of financial freedom when everything else is collapsing. Think about the last couple of years. Inflation ran hot. Prices at the grocery store doubled for basic items. Rents shot up. Energy costs became unbearable. People complained, politicians pointed fingers, and the central bank pretended it could manage inflation with a few rate hikes. But here's the truth. They don't control inflation. They control the narrative. And while they were selling the story of a transitory, those who held gold and silver saw their purchasing power preserved. That's the power of metals. They don't need a CEO. They don't depend on quarterly earnings. They don't rely on government promises. They are what they are: stores of value that have outlasted every empire, every currency, every economic experiment. And if you think this time is different, ask yourself why the most powerful financial players on earth are quietly stacking gold while telling the public to stay in stocks and bonds. But here's the trap. By the time the average person realizes they need metals, it's too late. Dealers will be sold out. Premiums will be insane. Delivery will be months away. That's what happened in 2008. That's what happened in 2020. And it will happen again. When panic hits, the market seizes up. Those who acted early are protected. Those who waited are locked out. So what should you do? First, take a hard look at your stack. Do you have enough to give you peace of mind if the system locks up tomorrow? If banks closed for a week, if ATMs went dark, if markets froze, would you be comfortable with what you hold? If the answer is no, then you need to act while the window is still open. Second, be smart about how you stack. Don't chase shiny objects. Don't buy collectibles thinking they'll outperform. Focus on liquidity. Focus on recognizable products that you can sell or trade easily if you need to. It's not about impressing anyone. It's about protection. Third, don't put yourself in a position where you're forced to sell at the wrong time. The whole point of stacking is to create a cushion, not a burden. Make sure you're not overextending yourself. Build consistently, methodically, and sustainably. That's how you survive the long game. And most importantly, shift your mindset. Stop thinking of gold and silver as a way to get rich quick. Start thinking of them as tools of sovereignty. Every ounce you hold is an ounce of freedom. It's wealth outside the banking system, outside government manipulation, outside the fragile web of promises holding the economy together. That's the real value of stacking. It's not about price charts. It's about independence. Look, nobody knows the exact day the system breaks. Maybe it's next year, maybe it's 5 years from now, but the trajectory is clear. Debt is exploding. Trust in institutions is eroding. The middle class is being hollowed out. And the same warning signs that preceded past collapses are flashing again. History doesn't repeat, but it rhymes. And right now, the rhyme is unmistakable. That's why the message today is urgent. Don't wait for permission from the mainstream. Don't wait for the headlines to tell you it's time to panic. By then, you'll be too late. The window to prepare is open now, but it's closing fast. And when it slams shut, the only thing that matters is whether you took the warning seriously. Stack with discipline, stack with purpose, and above all, understand what you're really holding. This isn't just metal. This is freedom, condensed into a form you can carry in your pocket. And in a world built on fragile promises, that might be the most valuable asset of all.